Bitcoin has been pumping so far this week and many people are getting extra bullish right now. But is Bitcoin actually bullish, or will we see a bearish reversal on Bitcoin and Ethereum today? What we can see on Bitcoin is that Bitcoin is currently trying its hardest to reclaim the range low area right over here, where we had the previous range low area in which we have our range high area right over here for the price of Bitcoin as well. So Bitcoin has been knocking on that door once, twice, 3 times, 4 times, 5 times, and now a 6th time over here. And it looks like it's about to reclaim that massive range low area. Now, what we also do know is that Bitcoin has been taking out major sales of liquidity beneath the low over here. And after taking out the major sales of liquidity, we can see that Bitcoin was forming an hour 4 reversal structure back towards the upside right over here, in which you can see that we sweep the liquidity once, form a lower high, we sweep it twice and also sweep the local low before pushing towards the upside and breaking structure back towards the upside on the 4-hourly time frame. So we have a bullish hour 4 reversal structure. We have Bitcoin that is potentially reclaiming that very important range low area right over here, in which we can say that we are looking at a potential major high time frame deviation over here below that range low before squeezing back towards the upside towards that range high once again. Now, I do still be open to a potential scenario where we see a bit of a local sweep over here to form a second deviation after the first bigger deviation before reclaiming that range low over here and pushing towards the range high. And I'm even still open for one last sweep of the monthly low over here before then aggressively reclaiming that range high once again as well. Whoops! You don't want your portfolio to drop like that, so make sure to like and subscribe and let's keep things steady. So what we often see is that first deviation, which we are looking at right over here, is being followed up by either a second smaller deviation, aka this local flush over here before the reclaim, or by a second bigger deviation, aka sweeping the current monthly low over here, forming a second bigger deviation and then squeezing back towards the upside right there. So I'm definitely still open to both those scenarios, but one thing for me is very clear over here is that this is not a chart that you want to be shorting on the price of Bitcoin. Bitcoin has been spending a lot of time over here in that liquidity area, so smart money had a lot of time to accumulate buy and long positions that they are then looking to unload in this massive liquidity pool that we have resting right over here. Now, why am I marking this out as a major liquidity pool? First of all, because we see some major imbalanced move over here. But second of all, when we go to the weekly time frame and I quickly remove all my drawings from the chart on Bitcoin and I zoom in, what we can see is that Bitcoin swept that previous all-time high over here, but while sweeping the previous all-time high, Bitcoin was creating a major wick towards the upside right over here. 14 days of access to a trading community where we teach you how to trade backed by data-driven decisions. All of this can now be accessed for 14 days for just $1. There's a trial period that we offer to all people that want to test out the trading community Tribe Capital. All that you guys need to do is follow the first link in the description down below and I'll catch you guys there. Now we know that the 50% weak fill level will act as a major draw on liquidity. When we then navigate back towards the 4-hourly time frame, we can see that that 50% weak fill level exactly aligns with this high over here as well. Now, what a lot of retail traders are doing is that when they are shorting the pullback over here and they don't want to place the stop loss of their short all the way above this high, they will, for example, use the high over here to cover their stop loss, meaning that the 50% weekly wick fill aligns with a big liquidity pool over here, and that adds to the confluence of Bitcoin filling that wick for 50%. Now, why are these wicks a big draw on liquidity? Because a wick is indicating too fast of a price movement. And if price moves too fast into a liquidity pool, smart money doesn't get the time to fill all of their buy or sell orders. Why do they need time? Because those orders are so big that it takes time for them to get filled. It's like you want to fill an order of 1 million lemons. If you want to fill that order of 1 million lemons, to fill all your bags with those lemons, it's not going to happen in an hour. It's probably not going to happen in a day. It's probably going to take a week for you to fill those bags with 1 million lemons before you can take them home or take them to your store. It's the same with these big players. It takes time for their orders to get filled. So if price wicks into a liquidity pool very fast to the upside and back to the downside, they simply don't get the time to fill all of their buy and sell orders. So what do? They push the price back towards that area the next day or the next week to then still fill those unfilled orders. And that is exactly what will happen on the price of Bitcoin. And that is exactly why weeks are always a big draw on liquidity, and then especially that 50% week fill level right over here. Now, what is also quite bullish on Bitcoin is that if we mark out the weekly open over here, and I'm going to mark out the weekly close right over here, we can see that Bitcoin formed the first extreme of the weekly candle over here on a Monday, and it's currently forming the second extreme of the weekly candle over here on a Tuesday, meaning that P1, pivot 1 was formed on a Monday, and P2, pivot 2 was formed on a Tuesday. Now, when we convert this to statistics, and I select the last 18 months of data over here on Bitcoin, and I select the weekly time statistics on the Brighter Data platform, we can see that 69.2% of the weekly candles over the last 18 months have formed the first pivot on the Monday. 19.2% of the weekly candles have formed the first pivot on the Tuesday, meaning that 88.4% of the weekly candles form the first pivot on Monday or Tuesday. But the majority of the candles form the first pivot on a Monday. And we can see that because we just formed a new P2 towards the upside on a Tuesday, that all of a sudden the weekly low, aka the first pivot that I talked about, only has a 24.4% probability to get taken out right now, meaning there's a 75.6% probability to hold the weekly low for the rest of the weekly candle on Bitcoin based on time. Now, the fact that there's a 75.6% probability to hold this low right over here for the rest of the weekly candle on Bitcoin adds to the confluence that we might be looking at a potential bullish reclaim of this major range low area right over here, that we might even hold this low and just continue higher from here throughout the rest of the weekly candle on Bitcoin. Now, when we look at the current chart on Ethereum, we can see that also Ethereum is trying to find its way back towards the upside over here. But for Ethereum, in my opinion, it's slightly different. On Ethereum, all that I can see are these equal lows over here that are resting right there, with another low over here, meaning that we have triple lows over here resting with a lot of liquidity beneath them. Now, why is there a lot of liquidity resting beneath them? Because this low initiated this impulse to the upside on that news event a few weeks ago, meaning that a lot of people were chasing this move to the upside and even longing the pullback over here. And all those people are using the exact same low to cover their stop, meaning the low right over here. So I think there's a lot of liquidity resting right there. And what adds to the confluence of me interested in that area is the fact that we also have that range low area right beneath those equal lows, in which we have our range high area right over here for the price of Ethereum. So I'm thinking that these lows over here are acting as an inducement for that range low area. And personally, even if Ethereum squeezes to the upside over here, obviously I would be fine with that, because my spot positions would massively increase, and I'm also long on a few altcoins. But personally, I'm not interested in fresh long positions on Ethereum until we take out that news low and until we form a high probability reversal structure right here. Now, if we do form that sweep followed by a high probability reversal structure like this on Ethereum, and we get that market structure break back towards the upside, in that case I'm heavily interested in long positions over here with my invalidation over here, targeting higher levels. And guys, also Ethereum is seeing a major wick to the upside over here that swept that previous high right there, and we can see that we formed a big wick into that liquidity pool. And once again, that 50% wick fill level on Ethereum over here on the 4-hourly time frame, just like on Bitcoin, is also aligning with that low right over here, meaning that this is acting as a major draw on liquidity around $4,900. And either I would like to see a high probability reversal structure over here, but another scenario that I'm personally also interested in on Ethereum in order to get into a long is if we sweep this low and only sweep it once, followed by a reversal and then break structure over here. This would not be a high probability reversal structure, but this would be a significant reversal structure. In that case, I'm also interested to long the pullback right over here on the price of Ethereum with my invalidation over here, and once again targeting that 50% wick fill level around $4,900 for the price of Ethereum. I hope you guys enjoyed this video. If you guys did enjoy this video, make sure to smash up the like button, make sure to subscribe to this channel, and I'll catch you guys on the next one. Ciao, ciao!